PSR distribution. What is PSR? PSR is profit sharing ratio. Generally, the partnership deed mentions a profit sharing ratio among the partners. However, if no profit sharing ratio is mentioned, then the profits will be distributed equally among the partners. In this presentation, I have taken the first slide to devote it on the profit sharing ratio and tried to explain the concept of the profit sharing ratio. You can see over here that we have taken three partners A, B and C, and there was a profit of 1 lakh and the PSR is 5:3:2. So we have divided 1 lakh in the ratio of 5:3:2. You can see very clearly A gets 1 lakh into 5 by 10. Why 5 by 10? You can see the total 5 plus 3 plus 2, the denominator becomes 10. So A will get 1 lakh into 5 by 10, 50,000. Similarly, B and C will get 30,000 and 20,000 respectively. However, if the PSR was 2:2:1, then A and B both would get the same amount. You can see over here 1 lakh into 2 by 5 each, so 40,000, and C will get 20,000. If nothing was mentioned about the profit sharing ratio, then it will be distributed equally among the partners. Interest on capital or IOC is generally provided to the partners and it is mentioned in the partnership deed. However, if the deed is silent, no interest will be paid. As it is an expense for the firm, it is posted in the debit side of the profit and loss appropriation account. The calculation is always based on the time, that is the time for which the capital has remained in the business. That is the reason why when the money is invested in the beginning of the year, full year's interest on capital is provided on it. However, if there is any additional capital investment made on 1st of July, then 9 months interest will be calculated. If it is invested on 1st October, then 6 months interest will be calculated, and so on. This is so because we have assumed a financial year, and as you know, a financial year starts from 1st of April and it ends on 31st of March. Therefore, if the capital was invested on 1st of April, full year's interest would be calculated. If the money was invested on 1st July, 9 months interest will be calculated. If the money was invested on 1st October, 6 months interest will be calculated. If the money was invested in 1st of November, then 5 months interest will be calculated. And if the money was invested in 1st of February, then the whole month of February and the whole month of March, 2 months interest will be calculated. Here we'll understand the calculation of interest on capital and the journal entries related to interest on capital. See very carefully, in this question I have taken A and B as two partners who have started business with 2 lakh and 1,50,000 respectively on 1st of April 2018. A has further invested 50,000 on 1st July and B has invested 50,000 on 1st September. According to the deed, the partners are provided interest on capital at 6% per annum. Calculate the interest on capital and pass the journal. Now here we have to understand that A has further made an investment on 1st July. So from 1st July to 31st of March is 9 months, and B has made a further investment on 1st of September, and from 1st of September to 31st of March is 7 months. So taking that into consideration and interest on capital as 6%, we have gone ahead with the calculation, and A, the calculation is 2 lakh into 6 by 100 giving you 12,000 plus 50,000 into 6 by 100 into 9 by 12. Why 9 by 12? It is invested in 1st of July. So the amount comes to 2,250. The total interest on capital of A comes to 12,000 plus 2,250, which is 14,250. Similarly for B, that is 1,50,000 into 6 by 100 is 9,000 plus 50,000 into 6 by 100 into 7 by 12 gives you 1,750. That is 9,000 plus 1,750, that is 10,750. Now let us understand the basic journal entry for this. As you know, interest on capital has to be paid by the partners. Therefore, the journal entry for this is interest on capital account debit 25,000 to A's capital 14,250 to B's capital 10,750. I hope it's very clear how we have got 25,000. It is nothing but the sum of 14,250 and 10,750. Further, this entry has to be transferred to the profit and loss appropriation account. Like interest on capital, interest on drawing is also calculated on the basis of time. The question mentions the percent at which the interest on drawing will be calculated, but we need to find the time at which it will be calculated. If no date is mentioned, then 6 months interest will be charged. However, if dates are mentioned, we will charge it according to the time left. If money has been drawn on regular intervals, then a formula which is shown below will be used. Time left after the first drawing plus time left after the last drawing divided by 2. Now, if we take that into consideration, and if we have made drawings at the beginning of every month, that means the first drawing has been made on 1st of April and the last drawing has been made on 1st of March next year. The time left after the first drawing is 12 months and the time left after the last drawing is 1 month. So 12 plus 1 is 13 divided by 2 gives you 6.5 months. Always remember we are taking the average. That means the time left after the first drawing plus time left after the last drawing divided by 2. Taking that, if we take the time, the money drawn at the end of every month, then the time will be 5.5 months. Why? Because the first drawing, the time left after the first drawing is 11 months and the time left after the last drawing is 0 months. So 11 divided by 2 will give you 5.5 months. Now there are 4 quarters in a year, and if the money has been drawn at the beginning of every quarter, that means the time left after the first quarter is 12 months and the time left after the last quarter is 3 months. That means the time left after the 1st of April is 12 months and the time left after 1st of January, that is the last quarter beginning, is 3 months. So over here we have got 12 plus 3, that is 15 months, divided by 2 gives you 7.5 months. If we take the drawings at the end of every quarter, the time left after the first drawing is 9 months and the time left after the last quarter is 0 month. Therefore, 9 plus 0 divided by 2 gives you 4.5 months. Always remember that if no date is mentioned or it is mentioned that the drawing has been made at the beginning of every month, then we have to use the formula of 6.5 months. However, if it is mentioned in the middle of the month, then we will calculate for 6 months. If it is beginning of every quarter, then 7.5 months. If it is middle of every quarter, then 6 months. So summarizing it, if it is drawn in the middle, okay, then 6 months interest will be charged. Let us understand the calculation of interest on drawing with the help of an example. We have seen over here that X, Y and Z are 3 partners. They have withdrawn money in the following way. X 30,000 during the year, Y 3,000 per month at the beginning of every month, and Z 3,000 per month at the end of every month. Now X has drawn 30,000 during the year and it is not mentioned when the drawing has been made. Y has withdrawn 3,000 per month and he has drawn it at the beginning of every month, and Z has drawn it at the end of every month. Taking that into consideration and interest on capital at the 12% rate, we will calculate X. You can see over there X is equal to 30,000 into 12 by 100 into 6 by 12 or 1 by 2. Why 6 by 12 or 1 by 2? Because the date is not mentioned, time is not mentioned, and if time is not mentioned, always interest on drawings needs to be calculated for half year. So here the calculation is for 1800 rupees. Now for Y 36,000, why 36,000? 3,000 per month. In a year there are 12 months. Therefore 36,000 into 12 by 100 into 6.5 by 12, that comes to 2340. We've already explained why it will be 6.5 months in the previous slide, where I've told you that average time will be taken. And for Z, 3,000 per month at the end of every month, 36,000 into 12 by 100 into 5.5 by 12 gives us 1980. Therefore, you can see very carefully over here, X time was not mentioned, so half year. Y time was mentioned at the beginning of every month, so 6.5 months, and Z time was mentioned at the end of every month, so 5.5 months. In this question, we can see that there are three partners A, B and C, and they have withdrawn 4,000. A has withdrawn 4,000 at the beginning of each quarter, B has withdrawn 4,000 at end of each quarter, and C has withdrawn 4,000 in the middle of each quarter. In a year there are 4 quarters, and now we are calculating interest on drawing at 12% per annum. So the calculation for A, you can see very carefully, 16,000. Why? Because 4,000 into 4, that is 4 quarters. So total drawing is 16,000 into 12 by 100 into 7.5 by 12. Why 7.5? Time left after the first drawing is 12 months, and the time left after the last drawing is 3 months. So 15 divided by 2 is 7.5 months. So this is giving you 1200. Similarly for B, 16,000 into 12 by 100 into 4.5 by 12. Time left after the first drawing is 9 months, and the time left after the last drawing is 0 month. Therefore, the total time average is 9 divided by 2, 4.5 months. That is giving you 720. And since C had drawn in the middle of each quarter, we have calculated it as 16,000 into 12 by 100 into 6 by 12, that is 960. Therefore, over here, the interest on drawing of A, B and C is 1,200 for A, 720 for B and 960 for C. Now let us see the journal entries for interest on drawing. If you consider that we have taken two sums, in the first case there was three partners X, Y and Z, and we had calculated the interest on drawing as 1,800 for X, 2,340 for Y and 1980 for Z. Now, therefore the total interest on drawing comes to 6120, which is obviously be transferred to the profit and loss appropriation account. It is an income to the firm, and therefore the next journal entry is interest on drawings account debit 6120 to profit and loss appropriation account. If you see the second case where the partners has withdrawn money at quarters, we had three partners A, B and C, and their total interest on drawings for A had come to 1,200, for B it had come to 720, and for C it had come to 960. The total of 1,200, 720 and 960 is 2,880. So taking that, the journal entry is A's capital account debit 1,200, B's capital account debit 720, C's capital account debit 962, interest on drawing 2,880, and the resultant entry to transfer to the profit and loss appropriation account is interest on drawing to profit and loss appropriation account 2,880. In the next lecture, I'll talk about the calculation of commission, the entries for salary, and the way the capital account is prepared.